All right. Hi, everyone, and welcome to tonight's webinar on the 26th Australia Day of January. So I'm doing it solo tonight, so you have to be probably a little bit patient just in case I screw up this stream. And we're going to do it old style. We're going to do it on the Thai charts tonight. So, yeah, we will definitely give it a go. Hopefully you can hear me okay. Can I just have confirmation in the chat room that you can, and I'll make sure that we are all good to go. Yep. Thank you, Dave. All right, guys. Yeah, look, we've got quite a bit to get through. Obviously, we've seen some really big market moves. It's been a little bit crazy over the last few days, as you know. And I've also got some really important announcements that affect all of the people that are going to the conference. Some really exciting news. You're going to love this, Dave. So cannot wait to actually get to that a bit later on. And also the options room going live next week as well. So we've got a hell of a lot going on. So welcome, everyone. Thank you for joining us. And let's start jumping into the charts. It actually feels like I'm doing my Q&A. I'm almost waiting for someone to actually jump in and start talking. That's not what normally happens on the Thursday. So this is a little bit strange for me. That's all right. It's all good. We will get through it. And excuse my voice. I have got a little bit of a cold. It's not the virus. I've been tested twice. It's actually the kids from they've brought it home from all of their activities they've done over the holidays. So thank you very much for that, kids. So anyway, all right, let's jump into the charts. What we'll do, we'll screen through a lot of the currency pairs first. We'll get through a lot of the main ones that we look at, a couple of the key indices, a couple of the US stocks that I've had people ask about, and then I was going to say we're going to go to questions. You can just ask me questions as you go, and I'll do my best to answer them as I read them. All right, so let's have a look at the Aussie USD. This is an interesting one. Yeah, straight up, we can see here that oh, what, you don't like the white? Oh, sorry, that's Thai style is white style. And it's going to be really difficult to change. So Tristo, sorry about that. I'm just going to have to deal. You have to deal with it for tonight. We're still in the transition phase to go to trading view, so that's why everything's still white on my screen. Very old style. So Aussie USD, let's begin with this one. We can see here that, you know, we've obviously seen the weaknesses of the daily chart. We've had a little bit of a rebound. Everything's starting to rebound a little bit. Like when we go through all of the majors, you're going to see, yeah, quite a bit of a push. I'm not convinced that it's actually going to do anything too fancy until we actually get a lot of the news out of the way that's coming out this week, of course. I think this is just probably, you know, we can call it like a bit of a relief rally, if you like. For mine, I think it's going to be, you know, a wait and see. I'm very reluctant to trade these sorts of markets, right? So when you see, yeah, markets behaving the way, as an example, let me go straight to, we'll come back to the currency pairs in a second. But when we go to something like the Russell, okay, the 2000, we saw the big breakthrough. Okay, we were hoping that it was going to bounce up and touch the, you know, back to the 21, sort of 2025 area. You know, we've seen this is almost the one that's behaving itself the most. Now, it could definitely get up there. Like this is, if it was going to find support, this was the last. Remember we talked about it last weekend. Last webinar, sorry. But this is the area. If it was going to find support, this was the only place it was going to find support. And it did bust through there a little bit. Now it's trying to rally up above it. Okay, so we could definitely see a little bit of a resurgence here. And I would like, ideally, in a perfect world, to see it come back up to the 20 moving average, because it's very difficult to trade from here otherwise. And, you know, the risk is, of course, if you go long, that this is just that little bit of a, you know, a consolidation before it actually just drops again. Now, you know, how far it can drop, like I said, what concerned us last week is that if this level didn't hold, yeah, the next level is a lot lower. And if we see the 2000 dropping, you know, down to these levels here, it's going to be a really ugly time for a lot of the bigger indices, of course. So, it's not a big industry, but I'm talking about the more popular ones like the SP500. So what we want to definitely be doing is seeing a bit of a pullback. We would like to see it pull back to at least the 20 moving average here, and then we can find out if it's going to actually, you know, continue on the job and push up to the ideal place, which is around that 2130, and then maybe break up above it, or if it's going to sell off from there. But at least if it gets up there and we see a change of trend, like we see a lightning bolt on the way down, you know, just below there, you know, we've got something to aim for straight up, right? This is going to be easy pickings, because realistically, if it gets up to here and then reverses at that zone, this take profit around here is going to be a pretty straightforward target, okay? And I would be fearing for that level at that point too, by the way, but that would be my first target, and I would be going for that and saying, well, that's awesome. That's great. That would be the perfect setup. Now, as you know, we've got really important stuff coming out. The Fed needs to do its thing. If it if indeed it wants to steady the market up, I think it would have even been surprised by the dramatic fall. This was, it probably caught a little bit everybody by surprise. We weren't surprised that it weakened. We were probably a little bit taken aback at how much it actually came down. It came down really, really sharply. So, and again, that doesn't present great trading opportunities. Now, did we short the NAS, the S&P 500? Even of course we did. Yeah, we talked about it on Wednesday, right? Of course we were shorting it. The signs were all there well before it fell, but not to the levels that it came to. Like we were taking profits a hell of a lot earlier than that. So what we're seeing now is a market that's a little bit, it's obviously very volatile, not a little bit volatile, but it's more uncertain about where a good trading level is, and you've got to be trading with a lot of caution at these points. So the best thing to do is to actually understand the levels that you really, really want to pay attention to and trade around those levels. Don't trade for the hell of it, because that's just putting yourself at unnecessary risk. So what we're going to be doing is identifying the levels that are important. When this market interacts with the key levels on a lot of the key indices, for instance, we're going to react and be very, very strong around this level here. Obviously, it's going to probably pay a little bit of respect to the 20 moving average, but depending on how fast it gets up there, if it gets up there fairly quickly, that 21 sort of 30 area is going to help be that resistance zone as well. That would be ideal. In a perfect world, it would get up there fairly quickly. So around the break of this zone here, not so much the wick action, but if we see it close below that 1980 area, which is where these candles have all found their opens and closes, as you can see, that would be very, very concerning for the short. If you really wanted to short and do a scalp, the absolute lows would be where you're aiming for in that regard. But as you can see here, the problem with what we've got going on here is it is actually in the middle of nowhere. And I mean, that may be obvious, but it's important to understand that and actually make sure that if you are trading, you're trading with intent. And that intent is from around this level here or below this level here. At the moment, I couldn't tell you, even with a gut instinct, which way it's going to go, whether it's going to go up to here, whether it's going to go down below there, mainly because of the volatility. Okay, so that's going to speak. Look, that is going to speak for a lot of the indices that we're going to look at tonight. But I just wanted to give you an example of what basically is probably the best behaved one. The volatility, obviously, the VIX is through the roof, as we would fully expect, and we're seeing big range movements every day, basically up and down. So the market is extraordinarily volatile. That tells us that market doesn't know where it wants to go. So very, very important to understand that. Let's get back to the currency pairs. So the Aussie, very quickly on the Aussie, look, it's sold off. It's still making lower highs and lower lows off a very important resistance zone. What it does from here is really all about price. If it makes a new low below this part, below say the 70-80 level, we're going to aim for that 70 cents. Really, really straightforward, very easy scalp. Okay. It's got a bit of work to do to get up above this. It's got to get above these moving averages for starters on a daily chart. And even then, as soon as it does that, it's got the 72.91 right in its face. So if you want to scalp this one, you want to be keeping it fairly close to the proximity of the moving averages. If it breaks above the moving averages, then I think you've got a very clear target, which is good. But probably the preferred trade on this, forever the bear on the Aussie USD. I think I would like to see it probably get down and close below that 70-80 area. And I think that gives us a really solid target. That's a really, really solid 80 pips down to the 70 cent mark. It'll get past there. It'll go down to the sort of high 69s probably in the first big move. But I think that's great trading either way. But a bit of a watch and see on it at the moment. All right, we'll go over to the US dollar CAD. Let's click on this one. So US dollar CAD is an interesting one. We know we had that head and shoulders there. Didn't quite reach the 80%, but of course it found the support at the 200. We talked about this. The 200 on the daily was going to be a big stepping stone for it. We've also got this roll reversal zone. Bit of a key area for it now. It's back up to that level that you would expect it's going to find resistance, and it has started to sell off. As you can see, we've got some wick action. Daily wicks are pretty important, as you know. And this is only reacting to what the US dollar index and everything else is doing anyway. So there's no real surprises here. For me, I would probably like to see it probably go long, to be honest. I think if it started to turn around from this point here and made a new higher high, then we've got the lightning bolt that we want, and that opens itself up all the way back up to the 128s, even 128.50. I think that's really, really good. What we want to see, obviously, though, is price action telling us that it's going to do that. Look, failing that, at the moment, you would say, but Ty, wouldn't you take that roll reversal zone off the neckline? That's the conservative entry for head and shoulders. Yes, it is. It is. And there's no question about that. The only reason I'm not jumping on board on that and saying, wow, that's a really, really good trade is because we've got so many problems here. Okay. If this did now, let's turn this into a bit of a learning session as much as a trading session. Okay. Because we've got a little bit of time on our hands. If this came down here and rebounded back up in a couple of candles and it didn't have a 200 moving average and it didn't have a very strong roll reversal zone, we would be looking at absolutely selling the first touch of that as soon, especially when it reverses and shows any sign of weakness. Okay, we'll be straight on that, right? But the fact that it did this, and we knew that it was going to be a strong level, like we identified that last week. So it wasn't a great level to be trying to break through, even from a head and shoulders perspective. And it wasn't like we didn't know about it before it even did it, right? We knew that the 200 was a little bit too close for comfort for the profit target of a head and shoulders anyway. And we knew that we've got a roll reversal zone, which is just as important. So when we know that information, we're already armed with the fact that we've got to trade with caution here. But when it does, 5 or 6 days of this, which is basically just rejection, and still finishing above that level, we've got to be very, very, very conscious of the fact that this level is holding. So it doesn't really give me a lot of confidence to just go in and actually take the first short off the reversal of the neckline, right? That's why, it's easier to sort of, when you look at it like this, it probably makes a lot of sense, but you've got to identify this before time, right? So and before time, even before these candles and wick action were happening, right, we knew that this level was going to be strong. So we had a good inkling. We don't know anything for sure, but we know it's going to more than likely give it trouble. We wouldn't be looking for a big breakdown there. So that's what we really want to be very, very mindful of. We want to be mindful that the downside move from the reversal of the neckline is going to be troublesome pretty quickly. Now, if that's where you were trading to and that's what you wanted to scalp to, that's a different story. But at that point, you're not really trading head and shoulders anymore, right? So you've got to be mindful of that. So it's no point trading here and having you take profit at the profit of a head and shoulders. Okay, you want to be, obviously very, very aware that this is probably going to be the place that's going to find trouble. Now, if you can get a trade in there that's going to give you a better than 1-to-1 ratio, awesome, good trade. So that's what you've got to be mindful of. But you've got to look out for this, right? You've got to be, don't look at it after the fact and say, damn, that was a really strong level. I probably should have known. You've got to try and identify these levels before they actually happen. So, I know we don't normally, I'm turning this into a Q&A. So sorry if I'm blabbering on about too long on one particular trade, but I want to try and show you what we see all the time too, right? So you're able to actually try to identify the same thing. So you know what we're looking at as well. All right. Hopefully that makes sense to everyone. It makes sense. Give me a thumbs up if it makes sense, please. Or even just great. All right. Let's go on. We'll look at another couple of the key pairs, and then we'll start moving on to some indices, okay? Let's have a look at the this one still is giving me headaches. I'm not really happy with what it's done. This is the USD yen. Still not really wrapped with what the hell's going on here. I expected more from it, and to me, this is a very important zone. There's no question about that, but it's still there. And that's what's annoying. Like it's there. It was there last week. It's there, the exact same place. It hasn't really done what the rest of the market has done. So for me, it's a bit of a leave it alone for now. If it breaks above the moving averages and starts to trend up, great. We've got a very clear target of around 115.50. But if it breaks down from here, which it almost looks like it wants to, it could definitely reverse and push down. So it's a very, very key level. And it worries me that it's approaching it from below. I would have thought, given what we've seen, this week, that we would have seen a little bit more strength here. But anyway, let's let the market play out. It's got the 50 moving average right there. The roll reversals right there. It's got a fair bit of work to do, and it doesn't at the same time. So yes, it's got a very hard level to break through, but it doesn't have to move a lot of pips to actually break it. 50 or 60 pips. And a close above the 20 moving average, and we are off quickly. So it's probably one of those ones where you want to set an alert. But failing that, of course, I wouldn't trade, because we are in a very volatile market. I wouldn't trade the short on this until it actually broke down past the 113.20 area. So it gets rid of all this area here down there. Because rest assured, if it does that, this is probably where it's going. The 112 or 111.50 is going to be the first place it stops. So if we get the turnaround there, I think we've got 150 pips on the way up, and we've got about, effectively probably a good 100 pips on the way down without much trouble. So it's certainly worth setting alerts for, but a very difficult one to trade. So you can probably see, hopefully you can see what I'm talking about here. It is right at the place we just would not place a trade, right? So it's sitting there at the level where it's got extraordinary resistance, not a hell of a lot of support. But if it does just break up just a little bit, we're going to be off and running. All right. So now let's go with the dollar index. Really, really important. I love the dollar index. As you know, we've seen the strength. I've been pretty happy with this over the last week. It's not being very, very reactionary, and that's not such a bad thing. I think what it's actually doing is still trending up in a manner that looks absolutely tradable. And I think that's important. You don't want to see, I know we say it a lot, we want volatility, but at the same time, we don't want to be trading big, huge, slicey moves one way or the other. What we want to see is consistency. And what this has proven to us is that it's actually moving up in an orderly fashion. It's not really that much different to what it was doing over here, and we didn't have any volatility. So, but it is still tracking up. I mean, it's hit the 96. Yeah, we're happy with that. It's trading above the moving averages, and it's also done the lightning bolt on the way up. Now, the MACD has turned around very, very quickly here, and as you can see, it's about the histogram on the daily here is about to go above the zero. So, yeah, really, really important, obviously. And yeah, that means that this little pullback here has probably already been reversed in basically the space of about 2.5 weeks, which is not a bad thing if you're going long. Now, can it get up to these levels here? Well, of course it can. That's probably where we're aiming. The high 96s is probably where we're really aiming for. If you're not already in this, and obviously you're going to be trading the euro, and you're more than likely not trading the dollar index, but this does bode well for, the short on the euro. Of course, it's not really playing the game as much as I'd like with the CAD and the US dollar yen. So, a big break up above this level here, and then we will see, potentially the yen and the CAD start to increase in their strength. So we'll definitely, can tune back into them if we get a break above here. But the one we really want to focus on, of course, is the euro USD. This one is absolutely at the zone. The 112.80, the zone we always talk about. This is the one where we're seeing a lot of support. Now, you've got to say, given what we've seen on the indices, the currencies have been relatively well behaved this week, as you can see. We're seeing the weakness. It's trying to push down, but it's going to, like I said, let me just zoom that out a little bit. You got to go basically out to a weekly to really probably appreciate this, but it did touch a 20 on a weekly. We know that we're obviously in a downtrend. We have been coming down for quite some time on a weekly. It's the do or die zone for the euro. Just as it is for the obviously the dollar strength. If it breaks past this level, what I like about it is that if it's going to do it, it's going to do it on its merit. It's not going to be a reactive panic sell or anything silly like that. It's had time to consider what's happened this week. It's had time to consider all the potential news events that may come out. So we know that this level is very well considered. I mean, we know that because it's been here since October. So if we get that close below this level, happy days for the short. Very, very happy. But indeed, if it gets a support zone here, maybe double bottoms, or even on a smaller time frame starts to lightning bolt up, of course, it can get past these moving averages, and then we start looking for that 114, 115 area again, which makes it a pretty good trade. Not an amazing trade at the moment because it's right at that level. And of course, I see a couple of people have come in and answered the question on the Fed, which is awesome. So that's really good. That's what we're waiting for. Like everything is waiting for these, right? So we know this. We're very, very aware that that's what's happening, and we would be guessing if we were taking a trade. That's probably the key point here. If you are taking actually a trade at the moment, it's almost, if you're looking for a long position and you're not looking for a day trade or a scalp or anything like that, then that's perfectly acceptable because I mean it is a very, very strong support zone. But if you're looking for a trade on the things that we've looked at so far, we're definitely going to be very, very mindful of this level and probably wait for the price to confirm it. We talk about it all the time. Price confirmation is the most important thing. So we're very, very mindful of that. So that is very, very good. Let me drink some of my water before my voice is starting to give way. I can hear it already. Okay. The first of the key indices, the ASX 200. Huge wicks, as you can see, 70.63, bit of a rebound today. It's been very, very wicky. How you trade that, it's almost impossible to do it well. If you were, this kind of market is an option seller's and buyer's dream. All of the options positions that we've had basically for the 2 or 3 months in advance, have actually already been closed out because the market moved so quickly that the premiums went through the roof. We were able to close out everything early, which is always a bonus because it means that we can look at the market with fresh eyes. But are we jumping in and trying to, really relate a trade to what we're seeing right now? Well, no, we're being, we treat that as a good event. It means that we can actually now look at it with a fresh lens, and we kind of have to because the market's very, very different to where it was last week. Obviously, like last Wednesday, we were talking about weakness, and we had a very good feeling it was going to come down. We said, I think we even said it was going to be, I said, well, it was my prediction that we were going to see a 68.50 sometime in 2022. It only took 5 days, even though it was only there for a very, very small time. That is very difficult to trade, and it's not like you're going to be sitting there waiting for it, right? So, and that's the beauty of options, of course. It means that you can actually take advantage of these things when they do actually occur. Now, what we want to probably see is a steadying. Again, this is going to be one of those ones where, we're waiting. I think it's 11 hours, I think Monica said. This is when we're going to be getting the all-important news that everybody is waiting for. It might sound obvious, but only 1 or 2 things is going to happen here. It's either going to rebound very, very sharply and it's going to be, back in the 7200s before you know it, or it's going to, get back down to this level. Now, the problem with the 68.50 to 67.50, as much as it's not a problem in a sense, because it's a really, really good reload and support zone, especially for people who are trying to look for longer term positions and place investment trades. It's a great place to long, make no mistake, but it's already tested it, so it can get there really, really quickly. As you can see, it's already gone there. So any volatility whatsoever is going to get it right back here. But what we want to definitely see, and ideally for trading well into the start of the year, we want to see it stop right here. Okay, we do not want it to be going and blasting past the 67.50 is the last line of defense for it. Really, that's where we want to make sure we hold up. Now, I'll draw a line where I'm talking about. It's this level here. Okay, very, very strong resistance right through here. Very strong resistance through there again. And it hasn't come anywhere near this level in a long time. Okay, not since way back in early 2021, which of course was when we were seeing a lot of the craziness happen. Now, we don't want to see this, obviously, right? That's not what we want to be seeing. I don't think we're going to get that, not unless something comes out that, look, Thomas talks all the time about, sell the rumor, buy the fact, buy the rumor, sell the fact, however you want to do it. There's different methods on how you actually can do it. A lot of people will panic on the actual news and sell it off, and then they'll start to buy it because realistically, a lot of it isn't as bad as it probably sounds. The market has packed in a lot of the information that they've already kind of flagged, right? So it's not like I'm amazed that people have reacted the way they have anyway, really, in a sense. Like you see the panic in a lot of the YouTube comments, and not just on our channel, but people are panicking everywhere saying, oh my God, it's the end of the world. The market, the interest rates are going up. Like, really? They've flagged that they were going to be going up, many, many times prior to, the last few announcements. It's not like it's a surprise. And I think the market has factored in a lot of that. So realistically, we shouldn't be totally surprised by it. But that said, we should be prepared. So, we know that if we do get, a negative sort of view, it's really, really difficult to see how they are going to react to what has happened this week, because the narrative may change to try and adjust the market to what they want it to be. Don't forget, they do control the market. They absolutely do. So they want to control it. When I say they want to control the market, they don't want panic selling, and they don't want an out of control market either. So realistically, now they've had time to digest how the market has reacted, and they can basically taper the announcement that they make to suit what they eventually want out of the market. Now, that could be a positive or a negative. It doesn't mean it's actually going to work out the way they want it to, but they've had time to adjust. All right. Does that make sense? Does that make sense that, if they were going to come out with something on, say, Monday, and like they've got their statement prepared, and the market completely capitulates, like it looked like it was going to, they've got 3 or 4 days to actually adjust the wording even. Sometimes it's even the wording or the delivery that can actually steady a market up. People hang on those words. Amazing. It's amazing. You can do some research on it. It's amazing how different wording in the same statement can affect the market. All right. So that's what you want to be doing. So you want to be really, really careful. And I wouldn't be placing any trades. If you want to know what I'm doing, or Tom's not doing anything because he's away, but if you want to know what I'm doing, I would not be placing any trading in any way, shape, or form. Otherwise, unless I'm already in, until we see a steadiness in the market, and by steadiness, the news out the way and the market just consolidate just a little bit, wherever that may land, whether that's right here, whether it's down here, or whether it's up here, or even if it's down here. We just want to see it consolidate. All right, so that's really, really important. So that's the biggest advice that I can give you. And that doesn't mean panic. I'm not saying panic, right? I'm just saying be conscious of what's happening and trade accordingly. And by that, it's waiting for the right opportunity. All right, so let me just go to a couple of quick questions here. We can look at the pound yen. We certainly can. We'll have a look at that in a second. Yep. DAX is moving up, Graham. Should have a quick look at that as well. We'll have a look at BHP. What do we got here? Wondering if this is the same type of narrative as this when the .com bubble was popping around the stage of a decline. Some say bounce, some say continued decline. Look, again, it's one of those things where if the big instos want to sell the market off because that's what they're going to profit from, and they make as much money on the way down as they do on the way up, don't worry about that. If they want it to go down further, it will go down further no matter what the Fed says, okay? This was a very, very big reaction to something that we already knew. Nothing was a surprise there. So that tells us really that they want to actually, they wanted to have a lower market. Now, if that level is the current levels, or if it's hit that level already and everything's fine, then we're going to start to see an increase and the show will be over. But if it does push down past the levels that are being created, so the panic selling level, this is one example, but we can go to the S&P 500 as well. If the panic selling level of around the 4,300 here gets broken again and we get a close, I'm not so concerned about the daily close at the moment. I'm probably more concerned about the weekly close. It's the weekly one that we've got to be mindful of. Okay. If we see a weekly close, if we see a big red candle by Saturday, I'll be starting to aim for the 3,900. That's just me. That's where it will more than likely go, because it's had time to consider this now. The news will all be out. And if that's a big red candle on Saturday morning, then this is probably where we're going in the next couple of weeks, if not the next week straight away. So that's what we've got to be. This is the all-important candle. The dailies are important, but when you see dailies behaving, like this, it's very hard to get a gauge on what's really happening, and you've got to give the market more time. And as we know, and as we talk about all the time, the bigger the time frame, the more important the signal. So this is where generally on a daily, this is what you'd see on a 4 hour or 1 hour, and the daily will be a bit more steady because we've seen all of the movement now. We'll go out to the weekly, and the weekly is the most important candle for this. I hear myself say, and I think, God, that sounds obvious, Tyler. Surely they would know that. But it's amazing how many people actually overlook that. Okay. It's really, really important to make sure that you remember the basic fundamentals of what trading is, and that the basic fundamentals are price action. So if that closes as it is, even as it is, or even a bit higher, that tells us a very, very important thing about the market, that it's reacted obviously quite aggressively, but it's had time to consider the news, and it's obviously in line with what they probably expected anyway, at which point we'll be starting to look for longs. But indeed, if we get the opposite effect and it's a big dirty red candle that closes somewhere near the lows on a weekly, then the opposite effect has happened, that the initial reaction is actually in line and consistent with the announcements that are coming out. And that spells, short-term doom, to the extent that it might get down to that 39.60 pretty quick. All right. So price action tells us everything. We don't want to preempt it. We want to let it happen. So this is the most important candle, the weekly candle. So we're going to pay a hell of a lot of attention to that one. Okay. So let's go down to a couple of the pairs that people are asking for. Just quickly, let me get my water for a second. Okay, that's keeping me alive at the moment. Let's go to the gold. So we'll go straight to gold. I know this is a key one that we always look at. Nothing to really write home about other than the fact that it's still doing exactly what we wanted to do, to try and go high. Very, very happy with the week's movement. Okay, we've pushed up again to around that 1850. I'm just looking for highs. I mean, at the end of the day, we're already long, right? You know we were longing gold. We said we were going to. We said in December that the minute this thing started to move, we were going to start longing it, and it did everything it needed to do. It's in a long term. This is a daily chart, so we've got lightning bolts all the way up. It's doing nothing different. In fact, it's trying to go higher again. And in a very volatile market, this is no surprise. I like to strip the instrument down to the absolute basics. Whether gold is, I mean, a lot of talk goes on about how important gold is versus the dollar versus the is it still a carry trade? Is it still a hedge trade? Is it still this, that, and the other? Gold is very, very tradable now. Okay, we know this. A lot of money goes through gold. When I'm in doubt, I strip it back to the technicals, and the technicals and history is what we basically base all of our decisions on. What did we know about gold prior to December? Generally for the last 7 years, for 4 to 8 to 10 weeks, gold has a very, very good long sustained run. It's done exactly that. It's printing for all intents and purposes, despite all of the volatility that's floating around and all of the the craziness that's happening. This is looking like a pretty strong trade. It's doing high highs and high lows. It's doing everything that we wanted it to do. Now, you should be well and truly in by now if you're going to long it. But if you're looking for an opportunity to get in, if it comes back to around that 1830 level and we get a small time frame reversal on that series of high highs and higher lows on a 4-hour chart, bang, off we go again. If it makes a new high here, it's got 1900 in its sights. This is probably the first point of call around that 1880. But realistically, 1900 is well and truly within its sights. It needs to do a little bit more to get there. My break evens were already in. And look, like I said, we were talking about this. I look at it from a very, very basic standpoint, right? It's at the end of the day, it's making higher highs and higher lows on a key time frame at a seasonally very strong time of the year. Now, is it the hedge it used to be? Is it the replacement for the dollar? Does it really matter when everybody thinks it is? Gold is associated with hedging straight up, right? Everybody thinks immediately. If you went down the street and asked anybody about, they don't know anything about trading, but you say, is gold a hedge? They would agree because that's what they talk about on TV. So whether it actually really is the hedge that it used to be is kind of irrelevant. If people perceive it to be a hedge, gold is going to strengthen when everything else starts to fall apart and get shaky. So that's the way I look at it. I keep it really, really simple. I don't try to analyze how much of a hedge it is compared to X, Y, Z. At the end of the day, I know all I need to know by looking at the chart and the historical time of the year, which we know about. So I don't go into too much detail. And the only reason I say this is because I had 3 emails today saying, should we be buying gold today because, the market looks uncertain? Is it a hedge? It doesn't really matter whether it's a hedge or not. People believe it's a hedge. And if they're asking the question, then a lot of other people are doing the same thing. So, what that does is it piles money into it. And for right or for wrong, it starts to go up. So hopefully that makes sense. I like to really keep things simple. And you could write, look, I could do probably a 1-hour video just on gold. I mean, Chris Weston does once, it's a whole hour, but he does a series every week on it. And people find it fascinating because he goes into the in-depth knowledge on how gold is actually reacting to other different currency pairs, how it's reacting to as a hedge. But that's if you're a heavy gold trader, that's all you trade, I would highly suggest you look at that. But if you're trading gold as just an instrument like any other, and you're looking for trading opportunities, keep it simple. You really, really want to keep it simple. All right. So hopefully that makes sense. And it's looking good, looking strong, and doing everything that we want it to do. We'll have a very quick look at the NAS. NAS is exactly, I mean, it's mirroring the SP500, right? The exact same thing, same deal, weekly. If it closes above this level here, we know we're going to have an awesomely strong hammer at the 50 on a weekly. And that bodes very, very well for strength, because then we know the market's considered all the stuff that we've been talking about for the last 25 minutes. And we're going to see some really good strength, or we should do anyway. Of course, if it closes down here, it's very, very scary where it can get to very, very quickly. So we're not going to focus too long on that, because we're basically looking in the mirror for the other key indices that we were talking about. All right, let's move on to, I saw a thing for BHP. We'll definitely have a look at BHP. Thomas said that I must look at Bitcoin, Amazon, and I've preloaded some of these, so we'll certainly look at those. The euro yen, I think it might have been the pound yen that someone wanted to have a look at. I'm not sure. I'll have to quickly check on that. Let's where do I saw BHP here? Somewhere BHP. BHP is pulling back to a zone where it's at a roll reversal. You can see pretty messy chart because obviously this is actually the this is not the futures. This is actually the proper stock. It looks a lot cleaner on trading view, as you can see. But realistically, I mean, what we can see, you go to a 4-hour, you can see we've had the big run. It's finding itself at a level of roll reversal. No, the $45 is very, very strong. Okay, you can see, we'll draw the horizontal line there. As you can see, if it's going to bounce up, this is the level it's going to bounce up. 20 moving average, 200 moving average, key level. Really, really good place to potentially reload if you're looking for an entry point. And if you're perfectly entitled to do, because there was resistance there. This is the level where you'd start to be getting a little bit concerned, right? You'd be like, well, I've got to do, I've got to do my due diligence. Is it likely to be shorting past? There's a lot of trouble here. 200 moving average, 20 moving average on the daily, and a roll reversal zone to boot. Okay, so pretty scary sort of stuff if you're trying to short it. But if you're trying to actually take a long from here and reload, potentially one of those levels is where you want to be at. Okay, this is going to feature very, very strongly in the options webinar that we're doing next week. I'll come to that in a minute. But yeah, very, very important level. This is the level that I would be looking at a small change of trend on the small one. So that is a really, really good one. All right, let's go to the next one. Chris says, after doing the mentoring program in November, December, it took a lot of fear out of the dump in the past week for you, and you're much calmer. Well, that is awesome, Chris, because that's the whole idea, is to keep the panic out. And really, when you do understand how the market moves, and that's why I think the mentoring program is so important, because it's very, very different to obviously the course, but it does really give you a big, big overview on how the market actually works in all of the cycles. So keeping the panic out means you get opportunities to get in and out at the right time. And I think that's probably the key. And we've had a lot of that. I thank you for that, Chris. But that we get a lot of that now. Like, it's been, we've received probably more, compliments on the mentoring than we've had on anything that we've ever produced, because I think it really tells the story and brings everything together. So I'm glad that it's doing that for everybody. And it's something that really kicks in, I think, when the market does what it's doing right now, because everybody's a trader when the market's going along, right? Everybody thinks they can just jump in and it's all good, no one panics. But the minute we see a bit of selling pressure, people start to second guess and question their strategy, and all of a sudden the panic sets in, and then all of a sudden you're doing things that you're going to be starting to maybe regret down the track. So it's really, really good to keep your head screwed on, understand how the market works, and also probably understand that the market's actually not going anywhere. Yeah, Jessica, we've already done the ASX 200. I'm so sorry if you missed it. You might have to catch the replay, because we did quite a bit on it. I know, Thomas, it's not Thomas's favorite, but yeah, we have covered it early. So hopefully you can just jump in there and scroll back into it, and you'll see very similar to the other indices that we just talked about. But I'd always do it for you. I'd always cover it for you. Let's go to very quickly to Bitcoin. Yeah, a bit of a resurgence. I mean, it basically did what everything else was doing, but it was doing that anyway, right? We know that. I'm not going to spend a lot of time on Bitcoin, because I think a lot of the, Thomas does that on Monday. I think that, it's potentially good for a move up to the 20 moving average, which you'll see at around close to the 40 level. I could definitely see that happening. No real big surprise. In fact, I kind of want it to do that. If you're looking for a scalping opportunity, that might be the one to try and get back up to that level. Is it done at this level here? That I'm not so sure about. And the reason I say that is because, a lot of good judges are calling, the very low 30s again. Now, when you say good judges, it doesn't mean that they're right, but when big money starts to move something, quite often the momentum actually, push it there anyway. It didn't. I actually thought it was going to get there, to be honest. When it got down to this level here, I wasn't even sure it was going to retrace. I thought it might actually get to that 30,000 again. I'm going to be watching it very, very closely if it gets back to the 40. At the 40, if it touches the 20, which is around that level there, if it gets up there relatively quickly, any sign on a 4-hour change of trend or anything like that, that it's going to go down, I will be looking for the shorts. And I think the preemptive move down to the 34 is your first target, but potentially all the way down to 30 is a very, very realistic scenario if we get the change of trend. But you watch that area carefully. It's not an automatic sell at that level. Make no mistake. I'd be looking at it and waiting for the momentum to shift on a 4-hour chart at the very, very least, and making sure that the momentum starts to kick in at that point. Okay, so we want to be definitely keeping an eye on that. At that level there, potential scalping opportunities up to the 20. So you're going to be going down to the smaller time frame, pullbacks to the 1-hour chart, traded up to the 40 in that regard. That's how I'd be scalping it. But from a longer term perspective, get it up to the 20 on a daily, and then wait for a 4-hour lightning bolt, and down she goes. All right. Yeah, Jessica, the 200 was down earlier in the video. So hopefully you'll be able to locate that one. So, all right, let's go on to Amazon. Amazon is basically mirroring the indices and the NAS, as you can probably appreciate. Big, huge sell-off. The last 3 candles have been extraordinarily volatile. Very, very big moves either side. Once again, it's the weekly candle, the all-important weekly candle. Okay, and this is what I love about technical analysis. It doesn't matter what you're looking at. The candles tell you everything you need to know. Price action tells you everything you need to know. We get a close below here. Market's considered it. It's screwed. We get a close, a full green candle at the end of the week. And all of a sudden, it's going to look very, very, it's not going to be a full green candle, but it'll be effectively a very strong hammer. So what I mean to say is we get a close above the current level. It's going to look like an extraordinarily strong hammer in the direction of where everybody wants it to go, which is back up to the moving averages, which is down to this, up to this level here, around that 3180 in the first instance. Some really, really good trading. So I think what we're going to see at the end of this week is some really good trading opportunities for next week, because I think one way or the other, we're going to know our direction. So that's why I'm saying trading right now is going to put you in a position where you're hoping. We never want to be in that position. We want to be in a position where we're having an educated, opinion on where it's going to go. And for me, it's very, very, very straightforward. All we have to do is wait for that weekly close, because then we know the next week's direction is going to be very, very clear for us. Okay, let's go to let me quickly just go through here. Hang on a second. Pound yen. Okay. And then I'm going to go to the news. I can't wait to talk about the news. Let me go to the pound yen for a sec. Love the old school MT5. It's not going to be around for much longer. Once I get my login to TradingView, all of my videos are going to be done on TradingView as well. So this is consider this a move down memory lane, because it's not going to be like this for very long. All right, chart window, Thai standard, very, very straightforward. All right, Robert, I think, asked this one. Yeah, Robert. Okay, look, mate, looking very, very strong. No question about that. Lightning bolts all the way up on the 1 hour. As you can see, it's breaking out of this for a short-term trend. It's really, really good. If you're looking at a scalp, it's looking very, very scalpable right now. Why? 20 is about to cross the 50. We've got a series of high highs and higher lows. That's on the 1 hour chart. Now we'll go to a daily. I'm sure you're interested in the longer term view as well. It's been, quite, steady on the decline, but it found support where we expected it to find support, 200 moving average. So now the $1 million question is, has it got enough power to break through the moving averages on the daily chart? Because they're the ones that really count. I think it could potentially do that. The stochastic is certainly oversold now. It's got 2 rejection candles off a 200 moving average, which is fairly important, but it has got the key moving average of 50 right in front of it on the daily, right? So for me, I'm paying attention to the 4 hour as well. The 4 hours trying to break above the 20, and it's got the 200 in its face. But if we see a 200 break on the 4 hour, and we see a close probably above that 154.50, to me, that's going to really open it up to a decent move. And that decent move could definitely get it up to, you're sort of probably talking the 155 in the first instance, because that's where the moving average is on the daily. But realistically, it's this high here at around the 155.80 that I would be probably targeting on this one. This can move fairly quickly. So the 1 hour is showing the signs that, you'd want it to be doing off that 200 moving average, the perfect trade-off that you're seeing there. Just 1 second, let me get some water. All right, sorry guys. It's almost like a lifeline, that water at the moment. Yeah, so that's doing all the right things for that move up, but it's got to break that key zone there on the daily. So on the 4 hour, sorry, for me, if it does that, then I go to the daily and I'm targeting this area here. Okay, so the 155.50. I like it. I do like this trade. I didn't have it on my chart, but I've got it on my home chart on the computer at home because I was actually looking at this trade and I'm just waiting for a little bit more strength. And if we get that, that is the key. Now, on the flip side of that, of course, if it turns around, it flips here and makes a lower low, lower than the 200 on a daily chart, then I think the selling could be quite significant. I think there's about 200 or 300 pips. So that is the target right there. The 152 is the next real target for this. It doesn't look like a long way from the 200 on this chart, but that's, it is a lot of pips. So realistically, you're talking about at least 100 pips for me. So that's what we're looking at. We're looking at potentially 100 pips on the way up or 100 pips on the way down. I would prefer the long though, for me, because I think it found support at the area that I wanted to find support. So to me, it would be far better if, it would be going long. That's what I'm hoping for, Robert. So, and that's what you wanted to hear. Good. So hopefully you've done similar analysis to me on that one. So that's awesome. So, all right. So very, very good. All right. So let me get to some of the housekeeping before my voice completely goes. As you can see, you can do one or two things. Yeah, that's Robert. Both of them are as good as each other. Both of those trades, the short and the long, are both as good as each other. The only difference is the long might work out first and a little bit quicker because the 1 hour has already changed around. But if this flips and breaks that level, short is on, and it's a good short too. They're both good trades. Both of them are as good as each other. I'm not fussed either way, but I've done analysis for both. So that's what I'd be looking for. Whichever way it breaks is the way I'm going to trade. So make no mistake, as long as you wait for it, you're good. It says you're in the short. I'm not sure when you entered, but it's at a key zone. You're going to know soon enough. Let's just say that. So look, a lot of the things that we've looked at today are wait and see. As we've probably, we've obviously seen that in the indices. The currencies have got a few trades for us, but it is one of those ones where we're going to know a lot more tomorrow and a hell of a lot more on Friday. I'm looking forward to my Friday wrap video actually, and Q&A tomorrow. Now Q&A tomorrow is open to everybody, by the way. The first point of housekeeping. It's the public one. We didn't do a public one last week because it was on a Friday. Next week is back to normal time, 8 p.m. Melbourne time, so 1 hour earlier than this webinar on Thursday nights. That's our Q&A time. It's going to be open to everyone, and we're going to know a lot more about what the market's going to be doing too. So I think it could be a really, really good Q&A. The link will be in the public Discord as well, but it'll be 8 p.m. Melbourne time. Okay, so very, very important to remember that. So on to some key things. We are doing the first options webinar of the year for the options traders next week. You'll get an email on that on the exact time tomorrow or Friday, so don't worry about it. You'll definitely get that. The options room opens on Monday. For those of you who are coming to the conference, and for those of you who are still thinking about coming to the conference, we have had a few little issues with booking the activities. Everything's booked for the conference and everything's going ahead, but the activities have proven to be a little bit of a challenge for us because obviously, COVID's been a little bit of an issue everywhere in Australia, and companies are a little bit afraid to commit, probably staff and things like that. So I can understand that. But what we've decided to do, with the great help of Amanda, who is really coordinating the conference from up in northern Queensland, we have actually added something to the conference that's going to make it even so much better than it actually was. For the people who have already booked it, obviously, we're including an all-day cruise on a very, very big boat called the Evolution, ironically. And I thought Amanda was joking when she said that, but she's not. It's a big 35-meter super yacht. We are actually covering that. So FX Evolution is actually paying for that for all of the conference attendees. So it's not changing the price of the conference, even though it retails at about $330 a head. We're covering that as our gift to you of being such a strong community, and our gift for being, basically resilient through times where, it would be really easy just to say, oh, this is all too hard. So for everybody who is coming to the conference, that is happening on the Monday. So the Saturday and the Sunday are the conference days. Okay, that's not changing, of course. That's all locked in. But For those of you who have already booked your accommodation, you can get an extension. There's no worries with the Novotel. You're still going to get the FXC rates. There's no worries there. And if you've booked flights to come home on the Monday, and you can actually stay up for that particular day, it's not compulsory, of course, but if you want to stay up for that day, it is included. And airlines, I know all the big three are being extraordinarily generous with booking for changing your booking is not a problem. Like we've had many people already do it. They change their booking. All they do is just go the next day. Planes are not full. They're not charging to do it. So just get in nice and early and get it done though. If you know you can actually come, yeah, definitely try and attend the Monday. It's going to be great. It's going to be an all-day cruise leaving at 9 a.m., coming back at about 5 p.m. It's going to include a barbecue lunch. It includes snorkeling. We've got the boat to ourselves. It's all ours, right? It's a 35-meter super yacht, but no one else except FX Evolution people from the conference are going to be on it. So it'll be a great chance to meet the people, meet your fellow traders, have an awesome day. There's going to be activities on the yacht if you want to do it. So I think when we get to the outer reefs, you can snorkel for free. Everything is just done. But you can pay separately for helicopter trips out there if you want to. So if you want to do a helicopter tour of the outer reefs, you can do that. It's very reasonably priced. So is the diving. If you want to dive off this boat, I think it's only $70. Correct me if I'm wrong, Amanda, but I think it was only $70 to actually go deep scuba diving off the super yacht. Snorkeling and the swimming and everything's all free. So it's most of it's included. It's amazing. It's going to be so good. And again, it comes at no extra cost. Effectively, realistically, the conference ticket, I think of $650 is really covering everything. Like it's not like you could not actually make it. We could not make it cheaper. It's actually costing us anyway. So we want to make it really, really good for everybody. We want to make the experience like no other. And I think it's a great way to finish off 2 days of really, really good learning, hanging out with your fellow traders for a day on this amazing boat that is chartered just for us. So for all of you who are coming, please try and extend to the Monday if you like boats, because it's all included. Okay, change your flights nice and early. We are going to send out an email with the exact details. It'll either be on Friday or it'll be on Monday for the people who have already attended the conference. And for those of you who haven't and still on the fence, we're going to do a couple of email blasts because I have still, despite all of the COVID that's around Australia, they haven't limited our numbers. So that means that we still are able to get more people to the conference if we need to. I know people were a little bit concerned that we were going to have, initially the conference was going to be limited to 30 people. So because that was all they were going to allow in the room, but now they've extended that. We can basically get up to 100 people if we can get them in. So we would love to see obviously as many people there as possible. It's not about money. We're not trying to sell anything, because at the end of the day, we're not making obviously a cent from any of this. Where it's actually something that we want to provide to bring everybody together and show the solidarity of the community, of course. And it's going to be, like I said, the speakers that we've got organized are going to be great. It's going to be really, really intuitive. And, you know, as much as it's going to be a lot of fun on the Monday, of course, there's going to be like a lot of chat, and we'll continue our discussions. And it's a really, really good time to, you know, talk to myself and Thomas and Amanda and the whole team and a lot of the speakers. Chris will be there, and the people, there's going to be quite a few speakers. We're going to be announcing those on Monday. There's going to be at least 4 now that are going to be speaking on the Monday, on the Saturday and the Sunday, that will also be on the boat. So we'll be able to pick brains, and it's just going to be an awesome, awesome day. So we're very, very excited to announce that. Okay, so you'll look out for the emails on it. You'll get, for whether you've got to the conference ticket or not. It includes everything. It's not just people who are booked. Even if you book now, you're still going to get everything included. So for all of you who have already part of it, you'll get one email. For people who haven't, you'll get another email saying this is what's included. If you'd like to come, book it in, and let's get moving. Okay, so, and I like Amanda. I'm going to big shout out to Amanda. She's made a lot of this possible. She's done a lot of recon up there for us to get this, and she's been able to organize this private charter on this boat. My wife was so excited because she's basically booked herself a trip on the boat too. Now she said she's coming because she watches a show called Below Deck, and she didn't think we were ever going to be on a super yacht by ourselves. So I said, well, you know what, this is the closest thing to it. So it is kind of like a super yacht, but we're going to one of the most beautiful places in the world, of course, being the Barrier Reef. So it would be awesome to share that with everybody who's coming up. All right, so guys, thank you very, very much for attending tonight. Sorry I had to do it by myself, but Thomas will be with us again next week. Sorry about my voice. I know it's been a bit of a battle, and it's probably been hard to listen to. But yeah, hopefully we're going to be cleared up by Q&A. We'll be getting a little bit better by Q&A tomorrow night, and definitely by next week. Okay, so look out for the link for Q&A in the Discord room for tomorrow. It's open to the public, so anyone can come in. We'll do another market analysis. We'll take some live questions, and of course, there are lots of fun because people can ask questions live, and we have a really, really good time. So, do I have any last-minute questions? Thank you all. Yeah, no, I appreciate all that. Jessica, what did Jessica say? If the buying a good option, watch the ASX. So even if the FOMO result is in, what happens then if the direction is bullish? Buying is a good option. Yeah, look, Jessica, if the market, let the market decide. If the market decides that it's going to deal with the news in a positive way, there's no reason to go against that. So yes, you're starting to look at the bullish. If the bullish candle is a decent one on the weekly candle, if we get a weekly close after all of the news is out, and the forecast is bullish, there's no reason not to think. And it's good levels to buy at too, by the way. Like, that sort of 70, 71 level, it's always a good pickup zone. In my perfect pickup zone would be around the 68.50. That's being a little bit selfish. I know it touched it there. So it went without me. I didn't get it there, of course. But to me, if it shorted down there and consolidated around there, whether it actually went there after the news or not, I'd be happy enough to start picking up from there anyway, because that's just a really good reload zone. Yeah, for an indice like that, you know that it's good value regardless, right? So good news, bad news, or other, anywhere between the 67.50 and 68.50 is a great reload zone. But if the news is positive and people are happy with what they see and the market starts to move in a positive direction, it looks bullish, then there's no reason to think that it can't get to the 7,400 again, and that gives you a good couple of 100 points of upside on that. So hopefully that makes sense. But really, yeah, let price action decide. But let's just say that even if it's negative and it gets back down to the 68.50, 67.50, that's a really good investment reload zone regardless. Okay, so we've got, what I like about it is we're going to win either way, whether it gets back down there or whether it actually turns around and consolidates here and starts to move up. We're going to get some good trading opportunities regardless. All right, so hopefully that makes sense. All right, thank you so much, everyone. I look forward to seeing you tomorrow at the Q&A and of course in the Discord room.